One tool that traders can use to determine whether or not a breakout is likely to be sustained or turned back down quickly is whether or not the breakout occurs early in a cycle or late. So we had our last confirmed intermediate cycle low back in August, and the tech sector almost looked like it had the ICL back in June and July, although the McClellan oscillator didn't confirm this pullback like it did here. But one of the problems with the minor breakout above 1363 right here in January was that it was occurring 20 some weeks into this intermediate cycle. Now there was a possibility, of course, that this could just become a parabolic move and we get our bubble top, and that's why I did not want to take a chance of losing our position at this point, and just chose to ride out any correction that might happen. And of course, now as we know, it turned out to be larger than what we had really hoped it would be, but the end result is going to be the same. We've got our bottom, and we're going much higher. But with this occurring 21, I believe it was 20 to 21 weeks into the intermediate cycle, the odds were not great that it was going to deliver a sustained breakout unless we were starting the parabolic phase of the bull market, and as it turns out, we weren't yet. Now, however, today we're going to be on day 18, and looking at the futures this morning, it looks like we may get a breakout above this 1400 level today, and we are now at the beginning stage of a new intermediate cycle. Sentiment is still very bearish. Like I said, we're only going on 4 weeks into this intermediate cycle. As we saw, this cycle here rallied for 20 or 21 weeks before topping. Same thing could happen here. So there's a very good chance that this breakout could deliver, and probably will deliver, a very sustained and strong aggressive move higher. I've shown this chart before. The magnitude of this sideways basing pattern, we didn't really get a sustained breakout until the latter part of 2016, basically after the elections, and you can see, once a breakout occurs after a basing pattern this long and this deep, it usually leads to a very aggressive and sustained, powerful move higher, and that's exactly what's happened here after we broke out for good above that 2000 high at 51.32. We made a couple of marginal pushes above it again here. It wasn't until after the election that we really broke out early in a new intermediate cycle. We had the intermediate cycle low on election night. You can see we broke out very early in that new intermediate cycle, and you can see what has followed. It's been a very strong and aggressive move higher. We made it halfway to 10,000, and now we've had our pullback and consolidation, and I think the semis are ready to break out of their multi-decade basing pattern, and that should be the driver for the NASDAQ to tack on the next 2,500 points up to 10,000. And if this doesn't turn out to be a parabolic bubble, then the size of this consolidation is large enough to suggest that the multi-year secular bull market scenario is going to be correct, and 10,000 will only be the first stepping stone. It would be similar to where the market went from the breakout in 82 to the temporary top in 87. So, as I've explained in other videos, our next 4-year cycle low is going to be due in 2020. So I'm pretty sure and convinced that we're going to get to the Nasdaq is going to get to at least 10,000 before this 4-year cycle tops. We're only halfway into this 4-year cycle, and we're halfway to 10,000 already. I don't anticipate that this 4-year cycle is going to top early. I think it'll top in a extreme right translated pattern, maybe middle of 2019, unless when we do get a breakout above 7,500, we start to accelerate very rapidly, go to 10,000 very quickly, and then if we were to get one of those public buying panics that send the Nasdaq from 10,000 to 20,000 very quickly, then I'd say, yes, we have a bubble, and the bubble would pop, and we would have to, go through a year and a half move down into the 4-year cycle low in 2020. No idea which one of those scenarios plays out at the moment. We're going to have to see what happens after the Nasdaq breaks out of this at this top, and how aggressive the move becomes in the semiconductor index once a breakout occurs. All right, so here's the long-term picture of the semis. You can see we're holding above the 2,000 highs. That's a good sign. We've got resistance at this round number 1,400. So I think a lot just depends on how this breakout unfolds. If we were to go very quickly to 2,000 or higher over the next several months, maybe we double the semiconductor index and get to 2,800 between now and say July, then that could be the prescription for a bubble in the Nasdaq and the rest of the market. And then at that point, I think we would have to deal with what happens at the end of every bubble, and we could possibly get our 4-year cycle top this summer if that scenario plays out. And then we would have to weather a very difficult period of about a year and a half while the market moves down into its 4-year cycle low. I'm not currently really leaning real strongly in that direction. Seems kind of unlikely to me that the semis are going to break out of this big basing pattern here and then deliver a 100% move in the next 3 or 4 months. It's definitely possible, and if we were to get a bubble phase, I would say it would be likely. You can see what the last bubble did. We went from 200 to 1,400 in just a little over a year, not quite a year and a half. So these kind of insane moves are definitely possible during a bubble phase. So I wouldn't rule out a very aggressive move to 2,800 or 3,000 on a breakout here, but I tend to think now anyway that I'm leaning more towards the 10 to 15 year secular bull market. So if that's the case, probably not going to go to 3,000 very quickly. And so all I'm really expecting is at this point is a strong move higher, and one that sends the Nasdaq to at least 10,000 before this 4-year cycle tops.